Hello, good evening. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of European markets for the Tuesday, the 29th of December 2015. This video is being brought to you by the courtesy of CFDs.com. Be sure to visit the specialist spread betting at CFD brokerage and certainly apply for that generous bonus offer. Alternatively, you can visit the educational site, which is www.cfds.education, to certainly learn more. Okay, let's see how we can decipher these markets now. It's been very tricky. This market is constantly in a short squeeze frenzy and trying to work out as to what's actually causing it, given the fact that the Shanghai was down minus 3%, the market's totally ignored. Given the fact that oil was down yesterday, the market's totally ignored. Now the oil price has certainly rebounded today based on nothing really other than the fact that we already had weak data with regards to Iran, obviously pumping more crude. The supply side of the equation certainly seems to be very healthy, but the demand side certainly not so healthy at all. So what's causing and triggering this at the moment? It's another question. We'll try and decipher it and see exactly where we are heading. Now, I certainly have been attempting to short this market even in this light volume environment, given the fact that the fundamentals are dictating so. Especially given the fact that now the Aussie and the Kiwi are into resistance, so that certainly should be very interesting, and US markets certainly are slamming into resistance as well. We shall see. Okay, so let's bring up the chart of oil, because this market certainly seems to be following the chart of oil at present. Now, yesterday's bearish engulfing candle still is holding, okay, so bear that in mind before you attempt to argue on the bull side. Yes, we've had a retracement back into previous resistance equals support, and we've certainly thrusted higher really on nothing other than, there's no real argument other than the fact that we had yesterday's sell-off and that caused the markets to fall, and now that certainly is causing the markets to rally. So everything certainly seems to be hinging on crude at present. That's basically what it is at present. Also with regards to Brent as well. Now if I just bring up a chart of Brent, which obviously is a weaker of the two, which is quite interesting. It certainly is a weaker of the two. If I just bring up a chart of Brent, bear with me. I thought I saved this last time, but I obviously haven't. Okay. So everything certainly seems to be shifting in terms of crude and oil itself. I mean, it's interesting, but let's just see how we can understand it and obviously profit from it as well as traders. Okay, so daily chart itself, obviously we still remain bearish. There's no real overtly bullish pattern here. There's no bullish engulfing candle. If anything, there's a bearish engulfing candle yesterday, and obviously we're trading within that at present. The 4-hour chart, yes, we are attempting to build a base here. Whether or not we can sustain it is a different question altogether, and we are now coming into resistance as well, which it certainly is interesting given the fact that when crude is weak, FTSE doesn't react as much, but when it's strong, FTSE reacts twice as positive. So whether you can attribute that to light volume, that's a totally different question altogether. It's interesting, that's all I can say. It's the best way of describing it, really. Okay, so oil certainly is coming into resistance. We have resistance on the Brent at around $38 level. On crude, we have resistance around this region here at 38, and then obviously you've got resistance above at 38.25, and those two areas will be key zones. Okay, looking at a 60-minute chart, again, you are coming into that horizontal resistance where we sold off yesterday, and that will be key, and that will obviously put a potential top in the market as well. Okay, in terms of the actual Euro USD, now this is a different obviously story altogether. The Euro itself obviously has fallen. That's obviously helped European indices thrust higher given the risk on trade, but the Euro now is coming into support. Now going at a 4-hour chart, again you have held that zone at 1.0980, and that's certainly triggered on the risk on trade. Okay, so again this level is holding as key resistance, so certainly a level to watch in terms of the European indices. Okay, now like I said, it is a day chart itself has failed to put in a lower low, so that certainly has to be respected as well. But having said that, you are into that 200 MA on the Euro, and you do have a decent level of support in this zone, which has held us far, which is 1.09. So certainly keep an eye out for that, and in terms of risk management as well. Okay, so given the fact that Euro is into support, and therefore one would deduce that European indices should be into resistance, and vice versa. So let's bring up the actual charts for European indices. Now before I do that, Asian markets overnight, we had the Shanghai, a small bounce. Before I go on to European indices, a small bounce in the Shanghai. If I just bring up the chart of Shanghai, you can see here we still have yet to close the gap, so a small bounce in the Shanghai after that 3% sell-off the day before. You can certainly see there's a double top on the Shanghai now, and certainly is into resistance. Now we did have anti-QE comments overnight from Japan. which again is quite surprising as to why the European and US markets are rallying so hard, given the fact that we've had those comments. Okay, and certainly is bearish for the Japanese Nikkei. Again, it's still trading within this red inside bar, and therefore no real sustained move higher. And given the fact that US and European markets are now into resistance, this will be a key test tonight, so it should be interesting. Okay, now in terms of European indices, let's see exactly where we stand. Now the daily chart itself, you can see that we are into this zone. This zone is the 3325, and you do have horizontal resistance here at 3315 as well. So again, the daily chart itself, given the fact that we have two unfilled gaps below that we need to close, and they certainly are the targets, and given the fact that the euro is holding at 1.09, obviously a support level. Now the 60-minute chart approaching that 200 MA at 3325, that will be a key zone of resistance for the euro stocks, and therefore potential top itself. Now I was expecting a HNS formation until obviously the light volume distorted it, and that's why I went long as a hedge on my other trades. My FTSE short has been stopped out -40, so currently sitting at -44 points this week. Same type of trading as last week. Last week I finished with -140, and I was caught out with the constant short squeezes in the market. Again, we have an unfilled gap, like I said, below at 3250. So again, that's a zone that we want to be watching in terms of price action. Now, if you cross-verify the Euro stocks with the Stock 600, bring up the daily chart here, you can see that we've had a thrust higher. I was expecting this level of resistance to hold, and we are into that fib 50 to 61% resistance, and that zone certainly is a level of resistance. Now, looking at the alternative, the actual stock 600. Let's just bring up the Euro stock or S&P 350 Euro stocks. Bear with me, because you always want to cross-verify the support and resistance. So S&P Europe 350. So again, previous resistance equals support. So this zone here is of key importance, and therefore that will act as a resistance zone for the S&P Europe 350. Will obviously keep the European indices at bay. Okay. Now, if we cross-verify that resistance zone with the Nasdaq, so if I bring up the chart of the Nasdaq, you can see a 60-minute chart here of the Nasdaq is now into resistance. Looking at your daily chart of the Nasdaq, you are into horizontal resistance, and therefore you are looking at that resistance zone to hold, and obviously causing the European indices to fall as well. If I bring up the chart of the S&P, here we go. Okay, bring up the chart of the S&P 500, looking at a daily chart. Yes, we've broken out the diagonal trend or the diagonal trend line on the way down, but we are into that horizontal resistance here. Okay, so again, that's certainly a zone to watch. Obviously, if you fail to hold that, then the next level is 2105. Very hard for me to envisage that level obviously coming into play, given the fact that we've already had quite a stellar rally from 2000 up to 2075. It's very hard to envisage that, especially given the fact that oil is now into resistance. So that should be interesting as to how we play out based on this light volume. As you can see here, volume is dipping, and the stronger volume certainly has the sell side. So that candle here on the 18th of December certainly will come into play. And given the fact that we had a good level of volume the day before, this is zone. Okay. So again, 2075 key resistance on the S&P, and therefore you are looking at resistance on the European indices as well. That's my interpretation thus far. Okay. Now, in terms of now utilizing that for the German DAX, let's just see exactly where we stand. Now, the German DAX is currently trading on the 10865 zone. Okay. Now we do have a horizontal resistance here, which is at 11,000. Now, whether or not we can obviously touch that 11,000 level prior to Christmas is going to be interesting. Now, we do have previous support equals resistance at this zone here, where we are currently at 10860, 10880, and we are into that fib 50 to 61% resistance. So those two areas are going to be absolutely crucial. The German stocks, again, now looking at previous support equals resistance at this 10870, 10860 level. You have resistance at the 11,000 level as well. And now it has been quite impressive, given the fact that we have two unfilled gaps behind the German DAX. Not two, sorry, three unfilled gaps behind now. So given the fact that this rally has been quite stellar, based on, okay, yes, you can argue today we had a weaker euro and a stronger dollar, a stronger oil price, and that certainly has helped the risk trade itself. But the Shanghai was down 3% the day before, and the rally today was only meager, very, very meager. Now, we've had anti-QE comments from the BOJ, and that certainly will not help sentiment either. So that's something that you certainly need to take into consideration too as a trader. Okay. Now, the 10-minute chart, German DAX, yes, we have pushed higher, but again, The more unfilled gaps we leave behind, the more vulnerable the market is to a reversal. And that's what I'm expecting at this current juncture, given the fact that 1.09 on the euro is a good level of support, and therefore will create risk aversion. But again, having said that, given the light volume, the markets are severely distorted in terms of their movements higher. We are failing to put in a reversal or failing to move lower due to the light volume effect. So again, take that into consideration as a trader. But for my understanding, given the fact that the Nasdaq and the S&P are both into resistance, you should see resistance on the European indices as well. Now, if we cross-verify that with the MDAX, and the MDAX is back into that topping tail of resistance, and therefore will be weak for the German DAX itself. Looking at the tech all share as well, again, we are coming back into that resistance zone, approaching that resistance zone. We're at the FIB 75% level on the retracement as well, and therefore you are looking at resistance, which obviously coincides with the Nasdaq resistance as well. Okay, looking at the French CAC, before we do that, let's have a look at the volatility index. Volatility index on the daily chart put in a bottoming tail yesterday, obviously put in a doji today, and is looking at building a base to potentially propel higher, and therefore it's bearish for European indices. Also, the same with the Euro stocks. Again, daily chart doji, 60 minutes, no lower lows. We're building a base here again, and therefore looking to propel higher, and that will obviously indicate a risk aversion trade. Okay, that certainly will come into play. Now, the French CAC itself, looking at a daily chart, you have this diagonal trend line. Obviously, we're in this coil. We have two unfilled gaps below, and therefore they will drag the French CAC lower, and therefore bias will certainly remain bearish there. Looking at your 60-minute chart, again, that diagonal trend line is coming into play. We failed to hold that resistance zone at 4685, and we have thrusted higher up to 4702. The 200 MA sits at 4715. Again, that will be interesting to see how that market plays when we get to that level. But again, you have 1, 2, and 3 unfilled gaps behind. That's not a very healthy looking market. It just tells you that the market is distorted and light volume floating higher without any justified move. Okay, and therefore those gaps are left open because the market is vulnerable to a reversal. That's basically how we interpret price action at this current juncture. Looking at the FTSE 100 now, a very, very impressive thrust. I mean, even on a weekly chart, it's an impressive thrust off that pivot support at 5900. Now the daily chart is slam bang into the 75% FIB, 75% resistance. Previous support equals resistance at this zone. So again, it has been quite a stellar rally, very, very stellar rally on the FTSE. Now I'll try and do a separate video on the FTSE itself, and I'll break down the sectors and try and see exactly where we stand. Now looking at the daily chart of the copper itself, yes, we have been basing, and we certainly are trading sideways and consolidating thus far. Gold price again is holding that resistance zone, and therefore you are looking at a potential move lower for the FTSE 100 itself. Aussie and Kiwi are certainly into resistance. Now if I bring up the Kiwi chart on a daily basis, you can see that we are into that slam, into that 200 MA, and we're into that horizontal resistance on Kiwi, and therefore looking at a potential reversal. Again, with regards to the US dollar itself, let's bring up the chart of the dollar and show you we are certainly putting in a potential. We already have put in a base, and we are now looking at a potential move higher on the dollar itself. Looking at your daily chart, with the dollar, it's just previous resistance equals support, and therefore looking for a move higher based on the stronger consumer confidence data out of the US today. So again, that should certainly help the dollar, and that should be interesting as to which way we move. Now the Aussie and Kiwi, like I said, are into resistance, given the fact that we have commodities into resistance, and therefore looking for a move lower on the FTSE and commodities, and obviously the market in general. Okay, again, keep an eye on that euro. That euro obviously holding 1.09, 095, 0910. A thrust higher, a move higher here now. It's negated that bearish engulfing candle on 60 minutes, and any revisiting of the 1.0980 region will obviously be negative for the equity market itself. Okay, and again, it has tested this 1.0880 level. It's thrusted higher quite substantially, and we are now looking for another thrust higher. Okay, and that will create the risk aversion trade. Okay, I think that's a market wrap for the 29th of December. Again, it is quite difficult to trade on the short side because the markets certainly are ignoring the bearish arguments due to light volume, so certainly remain vigilant with regards to them. I wish you the best in your trading, and if I don't make another video, Happy New Year. Goodbye now.